Good morning. Today is Monday, 18th of August 2025. Welcome to yet another episode of Pre-Market Commentary. This is Vijay here, who will now I'll talk about how do we trade gaps. How do we means how do I trade gaps? Because I'm not a SEBI registered advisor, so you'll have to do your own due diligence. Clearly, the market is showing the GIFT Nifty is showing a big gap. It started with some 200 points. Now it's about 300 points. So the question will be, what do we do when it opens with such a large gap? And what is important also is not only it opens with a gap, what is the positioning? As I mentioned yesterday in my weekly video, that FIs are continuing to have a significant short position in the Nifty futures. Now we are talking of Nifty specifically. Even in the stocks futures, a lot of people have taken significant short positions in the options also. So there is generally a mismatch between buying and selling. That is why you saw the prices lower on Thursday. In the cash market also, most people are disillusioned with that 6 week of fall. So in the seventh week, whenever there is a rally, they have sold. So we approach Monday morning with lots of good news, both local and international, and a gap of 300 points as of now. Of course, it can change, it can go down to 200 points, but that is where it is. And positioning being entirely focused on trying to sell the market rather than buy the declines. What the current position is. As I said, FIs are 92% short in Nifty futures. Look at it. This is a daily chart. It's a triple bottom which has been formed here, one, two, three, and then it has gone up in the last 3 days. Even then, if you look at it, there are enough number of red candles to suggest that people want to only sell rather than buy. If you really look on the down 6 weeks, you've seen very few green candles, red candles outnumber the green candles, which means the sellers had a upper hand during the trading. Now that's where we are. Now let's go back and see what was it in February end. If you recollect, most of the big fund managers were scaring us out of our positions in early February, mid February, and even close to end of February, where they said sell lock, stock, and barrel. I don't have to name names. If you have got a good memory, you will know that these were very large fund managers, legendary fund managers who all said get out of the market. So for 6 weeks, then the markets were down. FIs were 85% short. And then after about 2 days, the market took off, went up by 1600 points. This is in March. End of February, this was what it was 85% short. FIs today, it is 92% short. So that was 85% positioning. The market was very bearish. The legendary fund managers had all said, get out of the market. And yet the market had a different mind of its own. Then let us look at what has happened on in August 2024. If you recollect, August 2024, there was a problem as far as the N was concerned. N strengthened dramatically. Global markets fell, and we fell much more than markets. I think it got a lot of people blindsided. But yet, at that point of time, FIs were short only to the extent of 53%. So this was on the eve of Independence Day, just like what's happening now. Yet the market opened with a gap, but during the day, there was a lot of selling because it is not that, it was not a one-sided market. It was both sides. So there were longs as well as shorts. Longs wanted to get out of the market. That's why prices fell down after the gap opening. The shorts wanted to cover, and finally it ended with a gap up. Okay, that is as far as the August 2024 is concerned. Then you have today GIFT Nifty is now trading at 300 points. So you have to look at positioning. You also have to look at the gap. So how I approach this market is by what happened in May of 2025. That is just after the ceasefire was declared between India and Pakistan on Saturday. So Friday the market had gone down negative, just like what happened here. This is Thursday's levels. Friday the markets globally were working, so it had fallen down further. So there was a gap down. It would have an open gap down if there was no good news. About 80 to 100 point gap down was there, which meant most people who shorted would have still made money by selling at the lowest price on Thursday evening. So this is Friday. And now it has happened that now we are seeing a 300-point gap if you take from the Thursday's close Gift Nifty. Now go back and see what happened in May 2025. May 2025, this was Friday, and there was a lot of fear, like what it was here, and the market had closed somewhere, at the lower end, like what happened on Friday, Thursday here. Lower end means, it had not crashed because the opening levels were the low. Here also, the opening levels were low. This is a 15-minute chart, and it had closed significantly. I would say it is closed midway on. This was on Friday, May 9th. Now we had the ceasefire over the weekend, and then it opened with a gap of 325 points, somewhat similar to this. I don't have the FIA data of that. Unfortunately, I don't have what the positioning was, but I think it would have been on the higher side only. So we had this gap of 325 points. Now, what happens is this is a sudden gap up. Nobody expected such a gap up because nobody expected there will be a ceasefire between India and Pakistan. So let us say when we enter that, when we have a significant short position and when it is a surprise element, so invariably the first 15 minutes market will go up. Then generally I've seen, this is not only from what I'm seeing, talking of May 2025, in the past also, if markets get surprised on the positive and there is significant short position, then generally it gets sold into. So it got sold into the next 15 minutes, but because the positioning was so severe, plus the news was so good that the market took off the next 15 minutes. By 45 minutes, it had already gone much higher. Then, it took some rest, I would say. And then in the second half, because the FIs from London and New York would come into at that point of time, it went up another 600 points. So that day we saw a 925-point rally. Even if, let's say, you missed the 325 points, you would have got it at around 400 points, 500 points. After that, you would have still got 400 points as an intraday trader. So how I look at it is, even if it opens with a gap, I will be buying into the gap. If it comes down, again, I will buy. So I will split my trades into two parts: at the open, buy, and buy if there is a decline after the first 15, 20, or even 30 minutes. If I miss that first 15 minutes, then it's very difficult psychologically to go and buy at, say, when it has gone up from 300 to it has gone to 600. At 600 points, you will not be able to buy because it is already 300 points from the opening gap. And then you will still miss the 300 points which we saw on that day. I don't know how much it will go up. I have no calculation, but my strategy is simple. The market is heavily short. People are despondent. This news is beyond most people's understanding. This is a double barrel, actually triple barrel, because S&P positivity, upgrading India on Thursday, which most people didn't care. And then you have the Trump-Putin meeting, which went off successfully. And Trump now seems to be on the side of Russia. He's going to force Zelensky, whom he is meeting today, to give some concessions. Then the third most important is the Prime Minister announcing from the Red Fort that they will have GST 2.0, a completely revamped, which will bring in a lot of money into the consumer's hands, which they can spend during Deepavali. So all said and done, we are having a triple barrel gun shot, which will come and hit the bears, I suspect, which it was not so in May. May, it was only the ceasefire. Of course, it's very, very important that the ceasefire came and people said peace has broken out, so everybody went and bought. So we don't know whether we'll get 300 points, 400 points, or 200 points, whatever. And also please remember that FIs are short, which also can mean that they'll go further short. There'll be a lot of volatility. People get scared. People who are long against them may try to sell in the beginning because they got a 300-point gap up. So there will be a lot of confusion. I will tackle this confusion by buying the gap up at the open or in the first 5 minutes, and then wait for next 1 hour, up to 1 hour, and then buy second time if necessary, if it falls down. If it doesn't, then I will go along with my first tranche of buying. Today is Monday, and on Monday on my Telegram group, I put in all my trades on a real-time basis as far as my intraday trades are concerned. On Thursday, I had mentioned that we bought Bata. That was a swing trade. So we have carried forward Bata, we have carried forward ABB, this is swing trade. We have carried forward Nifty futures and Bank Nifty futures, both on the long side. We have been only long since last June, so it is not surprising that we only carry long positions, either intraday or swing or short term, that is up to 6 months or even up to 18 months long term. So everywhere we are only long. So we are happy with this gap up. We are not scared, because if anything, if we lose even today by trading the gap up, we still have the short term as well as the medium term and the long term positions on the long side. So I don't know, I mean, what others will do, but whatever I hope it is successful.